Well, first of all, obviously, investors have been really concerned about the Warner Brothers bid. The stock has lost a lot of money since the in October when it first came out that Netflix was interested in bidding. And you still see concern here. I mean, they said they've spent $60 million already on pursuing Warner Brothers. They're anticipating another $275 million in cost for that. They paused their share buybacks, which were considerable. They had $8 billion left in their buyback program, so they can conserve cash for the Warner Brothers bid. So if you're concerned about all this, there's certainly enough in there for that.
You know, I'm just looking at some of the headlines from here, and given, Chris, the reaction from investors over the last few months as Netflix emerged as a bidder, it hasn't exactly been a positive one. What's the case for why Netflix actually needs these assets? Because this is a lot of money to spend, especially when investors are getting increasingly concerned about how much money the company's spending on content.
Well, they do in their letter to shareholders sort of cite the broader case that they're no longer just competing against HBO or Paramount Plus or whoever, that they're competing against YouTube, TikTok, Instagram, and that they really only have a still small share of overall TV viewing, about 9%. And by acquiring this great library and these facilities, Warner Brothers, they could really increase their production of stuff all around the world and get into some new business, more consumer products, more video games. And so that's their argument. HBO Max would give them the opportunity to offer different pricing plans. So somebody just wanted HBO programming, they could get that instead of Netflix. So those are the things they're talking about.
I'm going to play Netflix's accountant. The content that they do get, they're going to get a lot of content, right? In one move.
If they get the deal.
If they get the deal.
Yeah, huge. I mean, it's a massive purchase in the 80 billion range. There's numbers that came out today of Warner Brothers projections of what their studios and streaming business are going to do out 5 years, and it's a potentially huge boost. Batman, Bugs Bunny, everything you could imagine for Netflix to own. But they've also been investing in their own licensing deals. Huge deal just announced with Sony. Universal kicked in as well this month. And they're even licensing shows they noted from Paramount, 20 programs. So huge purchases of every variety.
Does Netflix, Chris, get these assets?
You mean, do they ultimately win Warner Brothers, you think? Is that what you're saying?
Yeah. I know, that was quite a few chuckles.
Yeah. Well,
to be expected with a question like that, where you can't really see the.
Hey, it's either yes or no, right?
But look, they're the favorable.
Right. This is like, well, let's do the poly market prediction
exactly.
here.
But they are the favorable. They are the favorite. No question about that. It's the board has said this is a better offer.
Well, they're the favorite from Warner Brothers' standpoint, for sure. But there's certainly a community of people that think, smart people, who think that Paramount's going to increase the offer or that this is going to fail from a regulatory standpoint. So to pick the winner from here is a real dicey proposition.
In terms of their subscriber numbers, where does that, this has been something investors have been concerned about, right? The sustainability of their growth. Based on what we got from the company, how does that, push back on that argument, or does it not?
It was pretty strong growth, 8% up to past 325 million. That was at year end. That was in line with what investors were forecasting. Stronger numbers were the sales growth, which any company would kill for double digit like that. They said where it's coming from. It's new members all around the world and price increases. They said they're going to increase prices again this year. They weren't specific, so it could be just in certain markets. Advertising business is growing. We all wondered how big a deal that was going to be. They said it was $1.5 billion last year. That's only about 3% of their overall revenue. But they said the number was going to double this year. So that part of it's growing. So as long as they can keep the prices climbing and the subscribers growing and the ad sales coming, they're going to see that revenue growth.
I just want to, especially for those people who are listening on radio, Netflix shares are down about 4.5%. They've been as low as a 5% decline here in the aftermarket. This is after the company plans to boost spending on programs in 2026, crimping profits at the massive streaming company.
Hey, Chris, before we let you go, pricing power that the company has. You mentioned price increases that we could see. How much pricing power does Netflix have in the U.S.? Like, there's no shortage of places to go for content, but Netflix, they're kind of the OG.
Mm-hmm. Right. Well, I think the big story of last year really was that everybody raised prices, and we didn't see huge defections of subscribers. And it's certainly getting to the point where it's getting very pricey. Netflix has kind of been like the video utility. That's the one you can't cancel. It's got just about the lowest churn rate of subscriber cancellations of any of the big ones. So how long can it continue to do that? And maybe they would say if we have Warner Brothers, it's going to be a long time.
Hey, Chris, for someone who's watched the twists and turns of the pursuit of Warner Brothers from Netflix, what more might we likely get on this pursuit of the company on the analyst call, or basically nothing new?
Well, I think we'll see a lot of people maybe asking about their commitment to theaters. Ted Sarandos gave an interview last week, and he said 45 days the Warner Brothers films will be in theaters. So, there'll be discussion of that. That's a big issue all around the world. Are theaters in trouble? And then, I think they'll be asked more about the rationalization for the Warner Brothers deal, and do they really need to do this?